Dark cloud cover. The dark cloud cover candlestick pattern is a reversal candlestick pattern. It is formed at resistance during an uptrend. The dark cloud cover candlestick pattern is a double candlestick pattern that consists of two candles. The first candle is a large bullish candle and the second is a bearish candle. Color is important in this double candlestick pattern. The first candle should be green, followed by a gap up the next day, and the second candle will be formed red. The close of this bearish candle is below the midpoint of the previous day candle. The dark cloud cover candlestick pattern gives signals for downtrend. If this candlestick pattern is seen forming on the chart, then along with it, we also have to look at the volume of our second candle. If its volume is high, then the chances of market reversal are high. And also, if the volume of subsequent candles that are formed after this second candle, they also have a higher volume, then there is a greater possibility of the market going into downtrend. In this double candlestick pattern, the more gap up the second candle opens to form bearish candles, the stronger and more powerful the reversal in the market. Upon confirmation, you can mark your entry at the point that crosses 50% of day 1 and stop loss at opening of day 2 candle. The only difference between piercing candlestick pattern and dark cloud cover candlestick pattern is that piercing candlestick pattern is formed on support, which gives a bullish signal, and dark candlestick pattern shows us formation on resistance and gives bearish signals. When this candlestick pattern is formed, its signal should be confirmed with technical analysis such as using indicators like trend line, support, resistance, etc. We should confirm its signal by looking at all these.